Picture this. You're sitting at your trading desk watching the markets move. Your finger hovers over the buy button. The chart looks decent, maybe not perfect, but decent enough. Your brain starts firing off reasons why you should enter right now. What if this is the move? What if I miss out? What if this is my chance to finally hit it big? So you click. You enter the trade. And within minutes, sometimes seconds, you watch your position turn red. The market didn't care about your analysis. It didn't care about your urgency. It simply moved against you, like it always does when you act too fast. This scenario plays out thousands of times every single day across trading desks around the world. Retail traders, fund managers, even seasoned professionals fall into the same psychological trap. They mistake urgency for opportunity. They confuse movement with progress. They believe that doing anything is better than doing nothing at all. But here's what separates the winners from the losers in this game. The winners have learned something that goes against every instinct we have as human beings. They've learned that in trading, impulse is the enemy, and patience is the ultimate weapon. Today, I'm going to show you exactly why your impulses are costing you everything, and how developing true patience can transform your trading results. But first, make sure you're subscribed and hit that notification bell, because this channel is dedicated to the psychological truths that actually move trading accounts, not just fancy indicators. The human brain is wired for survival, not for trading profits. When our ancestors saw a rustle in the bushes, they didn't sit around analyzing whether it was wind or a predator. They acted immediately. That split-second decision-making kept them alive. But in trading, those same survival instincts will destroy you. Every time you see a price movement, your brain interprets it as potential danger or opportunity. The fear of missing out triggers the same neural pathways that once helped humans escape from wild animals. Your heart rate spikes, your palms sweat. Your rational mind gets hijacked by emotions that have no place in financial markets. I once knew a trader who made this mistake over and over again. He had a decent strategy, solid risk management rules, everything looked good on paper, but he couldn't help himself. Every time he saw momentum building in a stock, he'd jump in without waiting for his setup. He'd tell himself he was being decisive, taking action, seizing opportunity. In reality, he was letting his primitive brain make million-dollar decisions. Over 6 months, I watched him turn a $50,000 account into $12,000. Not because his strategy was wrong, but because he couldn't sit still long enough to let it work. He was trading his emotions, not his edge. The market doesn't reward action. It rewards correct action at the correct time. And correct timing requires something that feels completely unnatural. It requires you to do nothing when every fiber of your being is screaming at you to do something. Think about the most successful traders you've heard of. Ray Dalio, George Soros, Paul Tudor Jones. These aren't people who trade every market movement. They're people who wait for their spots. They understand that the market will give them opportunities, but only if they're patient enough to recognize them when they arrive. Soros famously said he doesn't make money being right all the time. He makes money by recognizing when the odds are heavily in his favor and then betting big. That recognition requires patience. It requires the discipline to pass on hundreds of mediocre setups to find the few exceptional ones. But here's where most traders get it wrong. They think patience means sitting around doing nothing. That's not patience, that's laziness. Real patience in trading is active. It's the constant evaluation of risk and reward. It's the ongoing analysis of market conditions. It's the discipline to stick to your criteria even when your account balance is screaming for action. Active patience means you're always prepared, but you only act when your predetermined conditions are met. It's like being a sniper. You don't fire at every target you see. You wait for the perfect shot, the one that gives you the highest probability of success with the lowest risk of failure. Let me tell you about a different trader. This one started with the same amount of capital, the same market conditions, even the same basic strategy, but she approached it differently. Instead of trying to catch every move, she focused on catching the right moves. She'd sometimes go weeks without placing a trade. Her friends thought she was wasting time. Her family questioned whether she was really serious about trading, but she understood something they didn't. Every trade she didn't take was just as important as every trade she did take. By avoiding the low probability setups, she preserved her capital for the high probability ones. When those setups finally appeared, she was ready. She had the mental clarity to execute perfectly because she wasn't exhausted from overtrading. She had the capital to size her positions properly because she hadn't blown it on impulse trades. After that same 6-month period, her account had grown to $78,000. Same market, same time frame, completely different approach. The difference wasn't skill or luck. The difference was impulse control. Now, developing this kind of patience isn't easy. Your brain will fight you every step of the way. It will create elaborate justifications for why this time is different, why you need to act now, why waiting is the wrong move. You'll start seeing setups that aren't really there. You'll convince yourself that slightly subpar conditions are actually perfect conditions. This is where most traders fail. They don't have a system for managing their own psychology. They rely on willpower, which is finite and unreliable. But successful traders don't rely on willpower. They rely on systems. The first system is what I call the cooling off period. Before placing any trade, force yourself to wait exactly 60 seconds. Set a timer. During those 60 seconds, ask yourself 3 questions. First, does this setup meet all of my predefined criteria? Not most of them, not almost all of them, all of them. Second, am I trading based on analysis or am I trading based on emotion? And third, if I place this trade and it goes against me immediately, will I be able to accept that loss without it affecting my next decision? If you can't answer yes to all 3 questions, you don't place the trade. Period. No exceptions, no special circumstances, no one-time deviations from the rule. Here's a challenge for everyone watching. Try the 60-second rule on your very next trade setup. Then come back and tell me in the comments whether it changed your decision. This simple technique has saved traders thousands of dollars. The second system is position sizing based on conviction. Instead of risking the same amount on every trade, risk more when your conviction is higher and less when your conviction is lower. This forces you to honestly evaluate how strong each setup really is. If you're not willing to risk your normal position size, maybe the setup isn't as good as you think it is. The third system is the opportunity cost analysis. For every trade you're considering, ask yourself what you're giving up by taking it. If you use your available capital on this marginal setup, you won't have it available for the exceptional setup that might appear tomorrow. Every trade has an opportunity cost, and impulse traders never consider it. But even with systems in place, you'll still feel the pull of impulse. You'll still experience that urge to act when the market is moving. This is normal. The goal isn't to eliminate these feelings. The goal is to recognize them and choose your response. When you feel that familiar tug of urgency, that's your signal to slow down, not speed up. It's your brain's way of telling you that you're about to make an emotional decision. Use it as a warning system. The stronger the urge to act immediately, the more important it becomes to pause and evaluate. Remember, the market will always be there tomorrow. The opportunities you miss will be replaced by new opportunities, but the capital you lose to impulsive decisions is gone forever. Every dollar you preserve by avoiding bad trades is a dollar that's available for good trades. This mindset shift changes everything. Instead of seeing patience as missing out, you start seeing it as positioning yourself for success. Instead of viewing waiting as wasted time, you start viewing it as preparation time. Instead of feeling anxious when you're not trading, you start feeling confident in your discipline. The traders who master this concept don't just make more money. They enjoy trading more. They sleep better at night. They have better relationships because they're not constantly stressed about their positions. They build sustainable careers instead of burning out after a few years of emotional roller coasters. But developing this level of patience takes practice. It's a skill that must be developed over time, just like learning to read charts or manage risk. You'll make mistakes. You'll give in to impulse sometimes. The key is to learn from each mistake and gradually extend your patience muscle. Start small. If you normally hold trades for minutes, try holding them for hours. If you normally trade multiple times per day, try trading once per day. If you normally enter trades immediately when you see a signal, try waiting for additional confirmation. Each small step builds your patience capacity. The beautiful thing about patience in trading is that it compounds on itself. The more patient you become, the easier it gets to be patient. The more you resist impulse, the weaker those impulses become. Your brain literally rewires itself to prefer waiting over acting rashly. I've seen this transformation happen countless times. A trader starts by forcing themselves to wait just 1 extra minute before entering a position. That minute becomes 5 minutes. 5 minutes becomes an hour. Eventually, they're comfortable waiting days or even weeks for the perfect setup without feeling like they're missing anything. This is when trading becomes truly profitable, when you stop chasing the market and start letting the market come to you. But let's be real about what patience actually looks like in practice. It's not sitting at your desk all day staring at charts doing nothing. That's not patience, that's torture. Real patience in trading is about having multiple things to focus on while you wait for your opportunities. The most successful patient traders I know have routines that keep them engaged without overtrading. They spend time analyzing different markets, studying their past trades, working on their strategies, educating themselves about new techniques. They're always working on their craft, but they're not always working in the market. Think of it like a professional athlete. A basketball player doesn't just show up to games. They practice shooting, they study film, they work on conditioning, they analyze their opponents. But during the actual game, they only take the shots they should take. They don't force shots just because they've been practicing all week. Trading requires the same approach. You prepare constantly, but you only execute when conditions align with your preparation. Here's what patience looks like in different market conditions. In trending markets, patience means waiting for pullbacks to support or resistance levels rather than chasing momentum. In ranging markets, patience means waiting for price to reach the edges of the range rather than trying to catch moves in the middle. In volatile markets, patience means waiting for volatility to settle before entering positions rather than trying to surf the chaos. Each market condition requires a different type of patience, but the principle remains the same. You wait for your edge to appear, then you act decisively. Now, let's talk about the psychological tricks your brain will play on you to break your patience. The first one is the scarcity illusion. Your brain will convince you that this opportunity is unique, that you'll never see another setup like this again. This is almost never true. Good setups appear regularly in every market if you know what to look for. The second trick is the fear of being wrong about waiting. You'll start second guessing your patience, wondering if you should have acted sooner. This doubt will grow stronger the longer you wait, but it's just your brain trying to get you to act impulsively. The third trick is the comparison trap. You'll see other traders making money on trades you passed on, and you'll feel like you made a mistake by being patient. But you never see all the losing trades those same traders took while you were preserving your capital. Understanding these psychological traps helps you recognize them when they occur. Recognition is the first step to overcoming them. Let me share a story that perfectly illustrates the power of patience. In 2019, there was a currency trader who specialized in major economic announcements. Instead of trying to trade every announcement, he focused on just one specific pattern that occurred maybe 3 or 4 times per year. For months at a time, he would do nothing but wait and prepare. He'd analyze previous occurrences of his pattern, refine his entry and exit criteria, calculate his position sizes, and mentally rehearse his execution. When his pattern finally appeared, he was ready. Each trade lasted only a few hours, but the preparation took months. Over 3 years, he placed fewer than 12 trades total, but those 12 trades generated more profit than most day traders make in a lifetime of frantic activity. That's the power of patience. It's not about trading less to make less money. It's about trading less to make more money. But patience isn't just about waiting for entries. It's equally important for holding winners and cutting losers. Impulse will tell you to take profits too early when you see your position moving in your favor. It will also tell you to hold losses too long, hoping they'll turn around. Patient traders do the opposite. They let winners run according to their predetermined plan, even when taking profits early would feel good emotionally. They cut losses quickly according to their predetermined plan, even when holding longer might feel hopeful. This is perhaps the hardest part of patience to master because it requires you to act against your natural emotional responses. When you're making money, your brain wants to lock in the gain. When you're losing money, your brain wants to avoid realizing the loss. Patient traders override these impulses and stick to their plans. If you're starting to see how patience applies to every aspect of trading, entries, exits, position management, then you're getting it. Hit that like button and stay with me because I'm about to share the deepest level of patience that most traders never discover. The market rewards this kind of discipline over time. Small winners become big winners. Small losses stay small losses. The math works in your favor when you have the patience to let it work. But here's something most traders don't understand about patience. It's not a fixed trait that you either have or don't have. It's a skill that can be developed and strengthened through deliberate practice. Start by tracking your impulse trades separately from your planned trades. Keep a detailed record of every time you deviated from your plan due to impulse. Note what you were feeling, what the market was doing, and what the outcome was. You'll start to see patterns. Maybe you trade impulsively more often on Mondays. Maybe you chase momentum more when your account is down. Maybe you exit winners too early when you've had a string of losses. These patterns become your roadmap for improvement. Once you identify your impulse triggers, you can create specific rules to counteract them. If you trade impulsively on Mondays, maybe you don't trade on Mondays until you've mastered patience on other days. If you chase momentum when you're down, maybe you reduce your position size when your account is below a certain level. The goal is to gradually expand your comfort zone with patience while shrinking your tendency toward impulse. Remember, every successful trader has gone through this process. They've all struggled with impulse control at some point. They've all had to learn patience the hard way through losses and mistakes and painful lessons. The difference between those who succeed and those who fail isn't natural ability. It's the willingness to keep working on patience even when it feels unnatural. Your impulses aren't your enemy. They're just misdirected energy. When you learn to channel that energy into patient preparation instead of impulsive action, you transform from someone who reacts to the market into someone who responds to the market. And the market always rewards thoughtful responses over emotional reactions. The difference between reacting and responding might sound like semantics, but in trading, it's the difference between consistent profits and consistent losses. When you react, you're letting the market control your emotions. When you respond, you're letting your preparation control your actions. Think about a chess grandmaster. They don't move pieces frantically when their opponent makes an unexpected move. They sit back, analyze the new position, consider their options, and then make their next move based on strategy, not emotion. The market is your opponent, and every price movement is its move. Your job is to respond strategically, not react emotionally. But here's where patience gets really interesting. It's not just about waiting longer before you trade. It's about developing what I call layered patience. This means being patient at multiple levels of your trading simultaneously. First, there's setup patience. This is waiting for your specific technical or fundamental criteria to align before considering a trade. Most traders rush this step because they see something that's almost right and convince themselves it's good enough. Second, there's entry patience. Even when your setup appears, you wait for the optimal entry point within that setup. This might mean waiting for a specific price level, a certain time of day, or additional confirmation signals. Third, there's management patience. Once you're in a trade, you have the patience to let your management rules play out without interference. You don't micromanage positions or second guess your planned exit patience. You wait for your predetermined exit conditions mid-trade. Fourth, there's rather than closing positions based on fear, greed, or boredom. Finally, there's portfolio patience. You understand that your trading results need to be evaluated over hundreds of trades, not individual positions. You have the patience to let your edge play out over time without getting discouraged by short-term fluctuations. Most traders only focus on the first type of patience, if any. But the traders who develop all 5 types of patience create a fortress around their capital that the market can barely penetrate. This layered patience concept is probably new to most of you watching. If it's giving you a completely different perspective on trading discipline, let me know which layer you struggle with most in the comments, and I can provide some feedback as well as others who see it. That's what this community is for. Let me tell you about what happens when you master this concept. Your entire relationship with money changes. You stop seeing every dollar as something you might lose and start seeing it as a tool for generating more dollars. You stop being afraid of the market and start being respectful of it. You stop hoping for luck and start depending on skill. This transformation doesn't happen overnight. I've worked with traders who took 2 years to develop genuine patience, but once they got there, their results were almost automatic. They weren't fighting themselves anymore. They weren't swimming against the current of their own psychology. They had aligned their natural tendencies with profitable behavior. The market has a way of testing your patience right when you think you've mastered it. Just when you get comfortable waiting for perfect setups, the market will throw you a curveball. Maybe it will go weeks without giving you a single good opportunity. Maybe it will give you 3 perfect setups in one day, testing your ability to stay disciplined with position sizing. These tests aren't random. The market is constantly evolving, and your patience must evolve with it. What worked last year might not work this year. What worked in bull markets might not work in bear markets. Adaptive patience means adjusting your weighting criteria as market conditions change while maintaining your core discipline. Consider the dot-com crash of 2000. Traders who had been patient during the bull market suddenly found their patience tested in a completely different way. The setups they were waiting for stopped appearing. The time frames they were comfortable with no longer matched market volatility. The patient traders adapted their approach. The impatient ones either gave up or lost everything trying to trade the same way in a different environment. This is why patience isn't just about self-control. It's about market intelligence. Patient traders understand that different market cycles require different types of patience. In trending markets, you need the patience to hold winners longer. In choppy markets, you need the patience to take smaller, quicker profits. In volatile markets, you need the patience to wait for volatility to settle before making big moves. Your patience strategy should be as dynamic as your trading strategy. Static patience will eventually fail because markets aren't static. But adaptive patience, patience that evolves with changing conditions, creates long-term success. Now, let's talk about what patience looks like when you're in a losing streak. This is when most traders abandon their discipline. They start forcing trades to try to get back to break even. They convince themselves that their next trade has to be a winner. They let desperation override their preparation. Patient traders handle losing streaks differently. They understand that losing streaks are part of trading, not evidence that their approach is broken. They use losing streaks as opportunities to review their process, not as reasons to abandon it. They know that the fastest way out of a losing streak is to stick to the same discipline that created their winning streaks. I once watched a trader go through a 7-week losing streak. Every trade he took seemed to go against him immediately. His account dropped by 30%. His confidence was shattered. His family started questioning his career choice. But he had one thing going for him. He had developed genuine patience over years of practice. Instead of panicking, he went back to basics. He reviewed every losing trade to see if he had deviated from his rules. He found that he hadn't. His process was sound, but he was going through a normal statistical variance. So he kept following his rules, kept waiting for his setups, kept managing his risk properly. The turnaround came in week 8, not because the market suddenly favored him, but because his patience finally paid off. The same setups that had been failing started working again. Within 3 months, he had not only recovered his losses, but had reached new account highs. That's what patience does during difficult times. It keeps you in the game long enough for probability to work in your favor. Impatient traders get eliminated during the tough periods and miss the profitable periods that follow. But patience during losing streaks requires a specific type of mental preparation. You have to accept that losing streaks will happen before they happen. You have to build them into your expectations, not treat them as surprises. You have to have enough capital reserved to survive them, and enough emotional strength to maintain discipline through them. This is why position sizing is so critical for patient traders. If you're risking too much per trade, you won't have the luxury of being patient during losing streaks. You'll be forced into desperate action just to survive. But if you're risking appropriate amounts, you can maintain your discipline even when things get difficult. The mathematics of patience are compelling once you understand them. Let's say you have a trading system that wins 60% of the time, with average wins being twice as large as average losses. If you trade profitable long term, but if you let this system with perfect discipline, you'll be impatient cause you to take trades that don't meet your criteria. Your win rate might drop to 50% or lower, making the system unprofitable. The difference between a 60% win rate and a 50% win rate might seem small, but over hundreds of trades, it's the difference between wealth and poverty. Patience literally determines whether your trading system works or doesn't work. Most traders never get to see their system's true potential because they never give it a fair test. They modify it too quickly, abandon it too easily, or compromise it with impulsive decisions. Patient traders give their systems enough time and enough proper execution to reveal their true capabilities. This is why backtesting and forward testing are so important for developing patience. When you've tested your approach thoroughly, you know what to expect. You know how long losing streaks typically last. You know how profitable winning streaks can be. You know what normal drawdowns look like. This knowledge gives you the confidence to be patient when others would panic. Without this foundation of knowledge, patience becomes blind hope. With this foundation, patience becomes informed discipline. The difference is enormous in terms of both results and peace of mind. Here's homework for everyone watching. Go backtest your current strategy properly if you haven't already. Understand its normal drawdowns and win streaks. Knowledge breeds patience. Let me know in the comments what you discover about your system, because you need to make your numbers real to yourself. Of course you lose, of course you win. It's all just data. But even with perfect preparation, there will be moments when your patience wavers. You'll have days when waiting feels impossible. You'll see opportunities everywhere and feel like you're missing out by not taking action. This is normal, and it's actually a good sign. It means your brain is working properly, trying to protect you from perceived threats. The key is having a plan for these moments. Maybe you step away from your trading station for an hour. Maybe you review your trading rules and remind yourself why you created them. Maybe you look at your trading journal and remember the pain of impulsive trades you've taken in the past. Whatever your plan is, having one in advance makes all the difference. When emotions are high, decision-making ability is low. But if you've already decided how to handle high emotion moments, you can execute your plan without having to make new decisions under pressure. Some traders find it helpful to write themselves a letter during a calm moment, explaining why patience is important for their long-term success. Then, when they're feeling impatient, they read the letter to remind themselves of their bigger picture goals. Others use accountability partners who can remind them of their commitments when they're wavering. The specific technique doesn't matter as much as having a technique. What matters is recognizing that patience is a skill that requires ongoing maintenance, not a trait that you either possess or lack. Remember, the market doesn't care about your timeline. It doesn't care that you want to make money this week or that you need to hit a certain profit target by month end. The market moves according to its own rhythm, driven by forces much larger than any individual trader. Your job is to synchronize with that rhythm, not fight against it. This synchronization is what separates professional traders from gamblers. Gamblers try to impose their will on random outcomes. Professional traders align their actions with probable outcomes and wait for probability to work in their favor. The beautiful thing about developing genuine patience is that it transfers to other areas of your life. Traders who master patience in the markets often find themselves making better decisions in business, relationships, and personal finance. They learn to think long-term instead of short-term. They learn to evaluate opportunities objectively instead of emotionally. They learn that sometimes the best action is no action at all. This broader life improvement is one of the unexpected benefits of becoming a patient trader. You're not just learning to make money in the markets, you're learning to make better decisions everywhere. You're developing a skill that serves you far beyond your trading account. But perhaps the most important aspect of trading patience is understanding that it's not about perfection. You don't need to be patient in every situation to be successful. You just need to be patient more often than you're impatient. You need to let patience be your default mode, with occasional lapses rather than constant struggles. Every patient trader still has moments of impulsiveness. The difference is that they recognize these moments, learn from them, and get back to being patient as quickly as possible. They don't let one impulsive trade turn into a week of impulsive trading. They don't let one mistake destroy months of disciplined work. This resilience, this ability to maintain patience despite occasional failures, is what creates long-term trading success. It's what allows small accounts to grow into large accounts over time. It's what transforms trading from a source of stress into a source of freedom. The path from impulse to patience isn't traveled once. It's a journey you take every single trading day, sometimes every single hour. Because here's what nobody tells you about developing patience in trading. Your brain will never stop generating impulses. Evolution spent millions of years hardwiring you to act fast and think later. A few months of trading discipline won't override that programming. What changes is your response to those impulses. At first, you'll feel them and act on them automatically. Then you'll feel them, recognize them, but still act on them. Eventually, you'll feel them, recognize them, pause, and choose your response. That pause, that moment between impulse and action, is where fortunes are made and lost. I remember working with a trader who had been struggling for 3 years. Smart guy, engineering background, understood risk management better than most professionals, but he couldn't stop himself from taking marginal setups. Every time he saw price moving, something inside him would scream that he needed to be part of that movement. We spent 6 months working on one simple exercise. Every time he felt the urge to place a trade, he had to physically step away from his computer and count to 30. Not think about the trade, not analyze it further, just count. 1, 2, 3, all the way to 30. Then he could return to his screen and decide whether to trade or not. The transformation took months, but gradually something shifted. Those 30 seconds became his reset button. The counting gave his rational mind time to catch up with his emotions. By the end of our work together, he was taking fewer than half the trades he used to take, but his profit had tripled. He'd learned that the space between impulse and action is where real traders live. This is your choice. You can keep letting your impulses drive every decision, chasing every movement, reacting to every tick like your survival depends on it. Or you can step into that space between feeling and acting, between wanting and choosing, between impulse and patience. The market will always be there tomorrow, next week, next month. The opportunities you think you're missing will be replaced by better opportunities if you're patient enough to wait for them. But the capital you lose to impulsive decisions, the confidence you destroy with emotional trading, the stress you create with constant action, those costs compound in ways that can take years to recover from. Remember this, every successful trader you've ever heard of had to make the same choice you're making right now. They had to choose patience over impulse, discipline over emotion, long-term thinking over short-term gratification. They weren't born with this ability. They developed it through practice, through mistakes, through the painful realization that the market rewards those who can wait and punishes those who can't. If this video has opened your eyes to the power of patience over impulse, I need you to do 3 things right now. First, hit that like button because this message needs to reach every trader who's been caught in the impulse trap. Second, subscribe and turn on notifications because I'm dedicated to sharing the psychological insights that actually transform trading results. Third, choose one specific area where you'll start practicing patience this week. Entry patience, exit patience, setup patience. Tell me in the comments which one you're committing to work on. Your impulses will never fully disappear, but your response to them can change everything. The next time you feel that familiar urge to act immediately, to chase that movement, to enter that almost perfect setup, remember what we've covered today. Use that feeling as your signal to pause, not to rush. Because in the end, patience doesn't just print profits, it prints freedom. And if you're ready to dive even deeper into trading psychology, check out the video I'll link above about building unshakable discipline. It's the perfect companion to what we've covered today. Until next time, remember, the space between impulse and action is where millionaires are made. Choose to live in that space.